So, the first quarter of the year just wrapped up, and one blockchain network posted a number so big, it's making absolutely everyone sit up and take notice. That network? It's Solana. Today, we're going to unpack that insane, record-breaking quarter, see what the big institutions think is coming next, and, uncover a really surprising link to the whole AI boom.
All right, so let's just jump right into the big question. Did Solana really just have the biggest quarter we've ever seen in blockchain history? Well, the short answer is a massive yes. But the story behind why? Now that's where it gets really interesting. 10.1 billion. Just let that number sink in for a second. According to the data from Artemis, that is how many transactions Solana processed in just one quarter. To give you some context here, this is the very first time any major blockchain has ever broken that 10 billion mark in just 3 months. This isn't just, a little bit of growth. This is a brand new milestone for the entire industry.
But look, to really get why this number is such a big deal, we have to look past the raw number itself. It's the speed of this growth and what it's telling us about adoption that really tells the full story. And here's the part that's just mind-blowing, the acceleration. That 10.1 billion, that represents a 50% jump from the quarter right before it. This is not slow and steady growth, people. This is exponential, and that kind of momentum is exactly why everyone is paying so much attention right now. Now, to really understand the scale here, just look at this comparison. Ethereum, the other big player, processed about 200 million transactions in that same time frame. But hold on, this isn't really a competition. They're built for totally different things. You can think of Ethereum like a super secure digital Fort Knox for big, high-value transactions. Solana, on the other hand, is built to be more like a high-speed rail system, handling millions and millions of tiny, fast, super cheap interactions. Okay, so what in the world is the engine behind all of this activity? It turns out there are two really key things that are powering this incredible surge. The growth, it really boils down to two huge trends. First, we're seeing a massive explosion in the use of stablecoins, digital dollars, for all sorts of payments and trading. And second, there's this growing adoption of what we call real-world assets, or RWAs, which are being brought onto the blockchain. And real-world assets are pretty much exactly what they sound like. Traditional stuff like stocks, bonds, even real estate, all represented as a digital token on a blockchain. Now, when you mix that powerful trend with the absolute scale of stablecoin use, and get this, Solana processed over $650 billion in stablecoin volume in February alone, well, you've got yourself some serious fuel for a fire. Okay, so with that kind of crazy, record-breaking performance, the question on everyone's mind is, what is next for the price? So let's take a look at 3 different targets that institutional models are mapping out for the year. Now, before we get to the actual numbers, it's super important to put this out there. These are not predictions set in stone. They're all based on a specific market condition called a risk-on environment. So just picture a world where global tensions are easing up and the Fed starts cutting interest rates, making investors feel a little more comfortable taking on some risk to chase higher growth.
All right, let's walk through these. First up, we have the recovery target, somewhere between $150 and $180. Analysts think this is pretty likely, basically just a return to a healthy average if the market cooperates. Next is the cycle peak target, landing between 260 and 320. This is seen as moderately likely, and it would probably be driven by a flood of new money from things like spot SOL ETFs. To put that in perspective, that would give Solana a market cap of about 60% of Ethereum's today. And finally, the big one, the blue sky scenario, at $450 or even higher. It's a long shot for sure, but it's all based on this idea of a flippening, where Solana could seriously start to challenge Ethereum's top spot in key areas like stablecoins and those real-world assets we talked about.
Now, let's get to what might be the most fascinating piece of this whole puzzle. And that's the connection between how Solana is doing and what's happening in the traditional stock market, especially with AI. Here's a really powerful way to think about it. The gigantic AI boom, led by companies like NVIDIA, is creating this absolute tidal wave of data. So, if AI is the engine creating all this economic value, Solana is starting to be seen as the high-speed rail that's needed to move all that value around efficiently. And the data actually backs this up. There's a really strong correlation between the tech-heavy NASDAQ 100 and Solana's price. So what does that correlation mean for investors? Well, it means a lot of analysts are now looking at Solana as a high beta play on the whole AI sector. In simple terms, it's kind of like a leveraged bet on tech.
If you think AI stocks are going to keep going up, this theory suggests Solana could go up even faster. But, and this is so important to remember, the same is true on the way down. The moves are bigger in both directions.
So, after going through all that data, all those numbers, what is the one big idea you should walk away with from all of this? It really all boils down to this powerful idea. The biggest vision for Solana isn't just about being a faster, cheaper blockchain. It's about totally rethinking what it is. If the network really does become the rails for tokenized real-world assets and for digital dollars, then maybe, just maybe, it shouldn't be valued like a currency at all, but more like a decentralized NASDAQ, an index of the entire digital economy that's being built right on top of it. And that leaves us with a pretty provocative final thought to chew on. Are we watching a fundamental shift happen right now where a blockchain's value isn't just about its own coin, but about the total economic activity of the entire ecosystem built on it? If that's the case, we might be looking at the future of how all of these networks get valued. A pretty powerful idea to think about.